Hi, this is a video update after a very long time. The last video that I had done was on July of 2022. So I just thought I'll do a very quick year-end update since it's been a very long time. So reflecting on the previous video update that I had done, one cannot tell it was really spot on. The major conclusion that I took away from that period was like the trajectory of the stock market would be a mirror image of how the bond market would be moving. Like if the yields were moving up, the stocks would go down, and likewise if the interest rate hiking was benign, then the stocks would have a room to the upside. So one cannot exactly tell that worked out likewise, because at that time the 10-year treasury yield was around 3%, and now it is at around 5%. S&P was trading at around 4,000. The S&P bottomed around in October, and now it's trading at 4,200 after having a recent high near 4,600 in July. So as for a year-end update, the S&P for the time being looks very oversold, because it has been going down for almost 3 months now. So there is a good scope that bond yields can soften for the coming few months, and also the S&P can have a year-end rally. Longer term, the inverted yield curve does indeed sign a very troublesome picture, because the yield curve had inverted quite a bit, more than 1% between the 2-year and 10-year treasury yields, and now it has started to de-invert. Usually the de-inversion is a signal that the market assumes that the central banks would be beginning to cut rates very soon due to economic slowdown. The economy has been mostly very strong in the US after the initial 2 quarters of 2022. It has been surprisingly resilient. That is on the economic front. So the two major drivers of the stock market returns in the next 1.5-2 years would be how the bond yields move, and also how the economy does in a cyclical economic cycle point of view, how does it perform. Coming to the Indian market has been very strong, especially in the small and mid cap arena. The large caps are tending to follow the S&P and has been struggling a bit. The retail investors seem to be having a very high participation for more than 1 year. Since June of 2022, Nifty has been performing really well, and most of the gains has been from new IPO listings, small caps, and up to mid caps, while the large caps like HDFC Bank and the like are struggling. So mostly if the S&P starts to struggle, obviously the small caps would start to underperform, and maybe the large caps will do well. Whereas in the initial scenario of the S&P having a year-end rally, the current trajectory of the Indian markets might continue. Hopefully I'll be able to do more updates in the coming months. Till then, bye.